Number one, Gary, a dovish CPI print.
All right. So early in the week, we got the CPI, that stands for the Consumer Price Index. For people who don't follow this all the time, when people talk about inflation, they're typically referring to the CPI. Now, one of the things that we've said on the show constantly is that the CPI is inaccurate. Plenty of people call it the CP lie. It is absolute government propaganda. It is intended to understate actual inflation. Your personal inflation rate, the amount that your household expenses have gone up in the last year, are probably much higher than CPI. But when people talk about government data, this is the inflation index. It comes out every month. And last, I think it was Tuesday, Wednesday, something like that, we got the June number that showed a year-over-year increase of 3%. That was below last month's 3.3% and below the expected 3.1%. That was the lowest annual inflation rate in a year, although we had been there a year ago. This is a key thing. People like to look at the monthlies, and the June CPI was actually 0.1% below the May number. So we actually saw, for the first time in a very long time, a decrease in the official price level. Again, what's going on in your household may be very different. The key elements of the downward surprise, the more dovish print, meaning the CPI was lower than expected, was falling energy prices. Gasoline was down 3.8%. I know Mark has opinions on that. Looking forward to hearing that in 1 second. Chairman Jerome Powell, Federal Reserve Chairman Jerome Powell, was his usual cautious self, talking about being on the alert for potential inflation spikes and, particularly from energy price fluctuations. Mark, how big a deal was the decrease in energy prices, and can we expect that to continue? He said, knowing the answer in advance.
It's already actually gone back up. So on the gasoline side, we're actually already back above last year's numbers. The other thing that I always find funny is you forgot used cars. So used car prices were also, because obviously everybody buys cars on a daily basis. So therefore it's going to be, it has the weighting that it has. When you look at the things, like to your point, and this is why we like to look at the specifics, because when you, and to your comment about how you feel at home, you're like, all right, well, that's not 3%. When I go to the store, when I pay my car insurance, when I pay my phone bill, all of these things look much higher. And it's because it is. If you look at those key pieces, I mean, you're closer to 7-8%. And then to your comment on keeping people in the dark, I mean, they've changed this calculation how many times over the last 40 years to make sure that people can't see what it actually is. So when you look at, like you made mention about gasoline, this is where we break it into flexible versus sticky, because flexible is something that can change readily. Like you fill up your tank 3 times a month, maybe 4 times a month. It's always going to be a different price. So it's going to flex. It's going to flex in different directions. Then you have things that are sticky, things that aren't going to change, that are going to be your rent, your cell phone bill, things that are more of a contractual basis where it's going to be the same month on month. Health insurance, another one. You've seen it actually didn't go down. It actually went up, which means that the flexible side was the one that moved the most, which is usually indicative of a pivot back higher, because everything's going to revert to the mean, as we've seen with gasoline, as you've seen with energy costs, as you've seen with food prices starting to pivot up, really making this inflation print more of a one-off and less of a change in direction in terms of disinflation, as they like to say.
Yeah, that everyone's so excited about disinflation, ignoring the fact that the price level for most people is way too high. I really like that you're mentioning food prices. That's been a long-running theme here, where we've talked about, the U.S. Bureau of Labor Statistics is telling us that food prices are only up 1%. Again, I ask everyone in the audience, if your grocery bill is up only 1% this year, I would love to hear from you. That is not the number I'm hearing from anybody in my circles. That's not what I see when I go to the supermarket or certainly to a restaurant. Cutting to the end is, and by the way, Mark, you were completely right about used car prices. If we go back 2 years, something like 40 or 50% of the giant increase in the CPI that year came from higher car prices, used and new car prices. And so at this point, about 60% of that increase has been unwound, meaning used car prices are coming down. They're still high, they're still expensive, but the price levels are coming down. And so the fact that this item that had been responsible for a huge chunk of inflation in 2022 is now in steep decline, and we still have a positive CPI, is remarkable. It's telling us there are a lot of other items that are not coming down and are still going up. The market, when the CPI was announced, and it's changed since then, took up the probability of a September rate cut from, I think, around, 60% to in the 70 to 80% range. And so the market is expecting a rate cut in September. DKI has a different perspective. Our suggestion is that the Fed is likely to keep interest rates higher for longer. I came out with that view in writing ahead of the PPI, which we'll get to in just a minute. But basically, we're still, even at 3%, which I think is understated, we're still way above that 2% target, which is still 2% above what the target should be. And on top of all of that, I still think Chairman Powell doesn't love the optics of lowering rates just ahead of an election. I suspect that if he can wait, he will. The Fed wants to appear nonpartisan. I'm not saying the people in that building don't have their own political agenda, their own political views, but I think the appearance of neutrality is important to the Fed. I think they're going to do what they can to keep it. So, if the market's betting 80% for a rate cut in September, I'm taking the under on that. I think it's less likely. Mark, what do you think? Am I right? Do you disagree? What's your view on it?
Oh, I don't think we get a rate cut in 2024. I had that view at the end of last year. I doubled down or tripled down on that in January. And to your point, I think that it's more of an optics. People like to fight the 1970s comments, but when you look at what happened in the 1970s, i.e. 1978, they started to cut thinking that the trajectory was there. We're on the path, therefore we can start cutting. And what do we know? The path wasn't there. And I think later on in the show, we're going to talk about how that path changed, especially when you start looking at labor prices and what the small business is doing, because small business is 47% of the U.S. economy. And they're telling you, hey, prices are going back up, labor's going back up. So are you really going to cut in front of that? And one of the things I was looking for just now, because I had talked about it. So used cars and trucks was down 10.1% year on year.
The big number.
Motor vehicle insurance is up 19.5%. So what do you pay for on a monthly basis? How many cars and trucks are you buying? And how often are you paying your insurance? So when you look at just the bifurcation in terms of some of the goods versus services, the service side is continuing to go up. You're continuing to see that stickiness, and it's actually trending back up, which is one of the key leading indicators that we've talked about previously when you look at freight and as we look into PPI.
All right, Mark, I'm going to put you on the spot with a question. Then, Rob, we're going to turn it back over to you. Mark, we've got 6 more monthly numbers. Well, only 5 will be reported this year. So we're going to get 5 more monthly numbers for the rest of this year. Do you think the CPI, and I'm not talking about actual inflation, I'm talking about the CPI, trends down toward 2% over the next 5 months? Or do you think it reverses and goes back up? And just a reminder, that's where we were a year ago. A lot of people are saying, hey, the CPI is down to 3%. The Fed should ease up and start to reduce rates. But they forgot that a year ago, the CPI hit 3% and then bounced right back up. Andrew will put up that chart, but you'll see in the chart, we hit 3% a year ago and it went back up. What do you think? Do we have the current trend, or are we going to see a repeat of last year where it comes back up?
It's a repeat of last year. Typically July and August, you have an increase in inflation. So on a CPI basis, I think one of the things that we've been targeting is an increase in July and August, something flat from August into September, a little bit of a cooling into October, November, and then depending on how Christmas goes, you'll usually see another acceleration in December. So realistically, I think July and August is going to be very strong. September is going to show something a bit more aggressive than I think what people are hoping for, because that's when you get the culmination of back to school, what was happening there. And to your point, in terms of some of these pivots and what things look like, people like to talk about the year on year, but from your perspective, month on month matters more, because you're seeing an increase versus last month, which was higher than the month before. So when you look at this is a compounding impact, which is why you made the comment about you want to talk to the person who's putting this together, because I do as well. I want to know where they're shopping, because I want to shop there as well. I want to know where they're getting their health insurance. I want to know where they're getting their car insurance, because that's where I want to get my stuff as well, because I definitely don't see 3% in my daily life.
Right. Can we get Janet Yellen to go grocery shopping for us? How does this work?
I think we're all packed and ready to go wherever that may be. And Gary and I have been asking that question. I think Mark's going to come along with us too.
Yes.
But gentlemen, good discussion there. And like everybody that listens to the show, say it together: higher for longer, coming from DKI, and looks like Mark's on board with that too. Thank